Okay, this video is specifically for my Airbnb and short-term rental guys, and I don't care if you're doing arbitrage or buying outright. Here's a video on how to fund an Airbnb with no money out of pocket. So most investors find the right property, run the numbers, see the income potential, and then hit the same wall, the 40 to 80K out of pocket before a single booking. DSCR loans help, but still require 20 to 25% down, closing costs, and don't touch furnishings or operating capital. Today, we'll show you the exact capital stack used at gapfunded.com to fund Airbnb deals from purchase all the way through to your first booking with $0 down. So let's get into it. So I'm Mick Wadley, founder of gapfunded.com. We help investors and business owners access the capital they need to close deals and scale their portfolios consistently. Short-term rental investing is one of the fastest growing strategies in real estate. Properties generating 2 to 3 times the income of a traditional long-term rental, qualifying on projected income rather than your W-2, and building serious equity while cash flowing from week one. The problem here is the funding gap. The cost that standard financing doesn't cover is what stops most people from ever getting started. And this presentation is going to fix that for you once and for all. So what a short-term rental actually costs to get into? The real cost of getting into a short-term rental has 5 components that the primary loan never covers. And here's what a 300K Airbnb actually requires. You got your 20% down payment, so 60 to 75 grand before anything else. DSCR and conventional loans require that 20 to 25% down. Then you've got 2 to 4% in closing costs. On a 240K loan, that's 4.8 to 9.6 due on day one. Now we're getting in, we've got the furnishings and setup. So 15 grand to 40 grand for furniture, linens, smart locks, decor, and photography. So these are unique expenses to short-term rentals. Then obviously moving forward, you got your operating capital, 5 to 10K buffer for the first 30 to 60 days. While bookings are building up and you're building those reviews on the location. So the total out of pocket on a 300K Airbnb is going to actually exceed 100 grand. And that's the number that stops most people, even if they get into their first one using savings. It doesn't have to, and this is how you scale faster. So why DSCR loans are the right foundation, but not the whole solution? A DSCR loan, or a debt service coverage ratio, qualifies you based on the property's projected rental income, not your W-2 or your tax returns. So for self-employed investors, this is a game changer. Key terms, let's go into it. So down payments, typically 20 to 25%. They're going to want a 660 to 680 minimum credit score. And the closing time's 2 to 4 weeks after underwriting, qualification based on the projected rental income via AirDNA usually. So the STR advantage, short-term rentals generate 2 to 3 times the income of a long-term rental. This makes it easier to qualify. The limitation here is the DSCR loan still leaves the gap. Down payment, closing costs, furnishings, and operating capital, that's your problem. And that's exactly where the rest of the stack comes in. So here's the 4-tool capital stack. Stack these 4 layers correctly, and the out-of-pocket number goes to 0. And we're scaling way faster than your competitors. Layer 1, the DSCR loan, primary financing covers that 75 to 80% of the purchase price, qualified on projected rental income, not your W-2. Now here's layer 2, unsecured capital for the down payment, shortfall, and closing costs. Deployed in 2 to 3 days, no equity split, no lien, and not requiring seller finance negotiations. Layer 3, 0% business credit card stacking. This is a 0% interest capital for furnishing, setup, operating costs, 12 to 21 month introductory periods, liquidated via Plastiq, Bill.com, or Melio. It's like a standard payment processor fee, 2.99%, liquidated into your bank account as usable cash. Layer 4 is the HELOC if applicable. For investors with home equity, this can even be equity in an investment property. This will replace or supplement layer 2 at 7 to 8%. So it's some of the cheapest capital available in real estate investing, and it's revolving capital that resets as the property cash flows. So DSCR loan and gap funding, covering the purchase. Your lender doesn't care about your income on the DSCR, they care about the property's income. As we went over, this is the qualification for the DSCR loan. We couple that with gap funding, 20 to 120K. Typically, we can stack these together to get 40 to 50% of your personal annual income, even if it's self-employed. Deployed in 2 to 3 days, fixed rate, we get 3 to 5 year terms with no early pay down penalty. So this is what's so great when you go to refinance the property once it's cash flowing, because you can just pay down that loan and keep pumping. You keep 100% of the equity, 100% of the income, no partners, no splits. Then we move into 0% business credit. This is the Airbnb setup capital. This is the layer nobody else talks about for STR investing, and it's the one that makes the model work at zero out of pocket. So you stack up to 4 business credit cards, the big dogs, Chase, Amex, Citibank, and we target those 0% introductory periods for 12 to 21 months. These don't report utilization to your personal credit file. So this can cover furnishings and equipment, furniture, linens, kitchen equipment, decor, smart locks, outdoor gear, and professional photography. You liquidate that into your bank account as usable cash. And then you got your operating buffer. So it covers the initial operating buffer and closing cost gap not covered by gap funding at 0% interest. And then the furnishing strategy, you got points, cashback, and credit building. When furnishing an Airbnb, you're spending 15 to 40 grand regardless. So put every dollar on your business cards. Earning points and cashback, Chasing business cash earns 5% at office supply stores. Amex Blue earns 2% on everything. On 25 grand in spend, that ends up being real money back in your pocket to keep pumping. Then we're building business credit. So every on-time payment is reported to business credit bureaus like Dun & Bradstreet. Stronger history means higher limits when you stack your next Airbnb deal. Rinse and repeat. So it's an ongoing operation. Once live, put recurring costs, cleaning supplies, maintenance, platform fees on the 0% cards, and it keeps costs free while continuing to build business credit. Beautiful thing is, if used correctly and responsibly, at the end of your 0% introductory period, you can go and apply for larger limits now that you've built your business credit up, and rinse and repeat. So let's look at a full deal walkthrough with $0 down. We got a 320 grand, 3-bedroom cabin, projected income 4.8K a month, occupancy around that 70% mark. So we got layer 1, the DSCR is going to cover 256K, layer 2, gap funding at 50K, business credit stacking at 60K. So you got no money down. The gap breakdown, so down payments at 20%, closing costs, furnishing setup, and an operating buffer ends up being that 107K. So at the 6-month mark, once we're in the deal, you're cash flowing 4.6 grand a month. Your monthly expenses are 3.1K and the net monthly cash flow is 1.5. Business credit paid down from cash flow. Year 1, refinance DSCR using proven income track record and use proceeds to clear gap funding entirely. No early pay down penalty. So here's the 4 biggest mistakes I see my Airbnb guys run into. And the first one's underestimating furnishing costs. Most first timers budget 10K and spend 30. Get 3 quotes from professional STR staging companies and build the real number from day 1. Number 2 is the wrong sequencing. So always make sure you get gap funding approved before touching business credit stack, so your profile is clean for DSCR underwriting. Using personal savings for the operating buffer. So the 0% business credit stack covers this at 0% interest for 12 to 21 months before you rinse and repeat and recycle. So don't drain savings for the costs that free capital can cover. And finally, just the wrong market or no pre-approval. Run our DNA numbers before committing to a market and get gap funding pre-approved before making an offer. The 2 to 3 day deployment assumes your file's already been reviewed and underwritten. So who qualifies here for the 0 down method we use at gapfunded.com? First time STR investors qualify regularly. Each layer has its own criteria. So here's what you need. Gap funding, we start at 650 credit score, verifiable income can be a W2, self-employed, and a personal credit utilization not already maxed. Beautiful thing is you can use the gap funding to actually debt consolidate to lower your DTI to then go on business credit stack. So that starts at the 700. Now that you've consolidated your debt, utilization's gone down. We see people's credit scores jump into the 700s within that 30-day reporting period all the damn time. So once we are at 700, we can credit stack. You can have a new LLC, link in the description if you want to set it up easy through Doula. And then we go and get our DSCR loan. Credit score 660 minimum typically, some are 680. Property's projected STR income covers the mortgage and no personal income documentation typically required. So here's the 4-tool stack, closing the gap completely, starting with your DSCR loan. Get your gap funding to cover the shortfall, fast deployment. Once you're in the deal, you're starting to build that business credit, stack them up for running costs, And layer 4 is HELOC. If you've got equity in a home or even another investment property, we can get up to 80% LTV deployed into deals at 6%, some of the cheapest capital on the market. On average, short-term rentals generate 2 to 3 times the income of traditional long-term rentals. So the income potential is real, the demand's growing. The only thing stopping most investors is the funding gap. And this stack closes it completely. Zero out of pocket, full equity ownership, cash flowing from month one. So let's go and close something. If you want to find out exactly what you'd qualify for, how much gap funding, how much business credit, and how that maps to your next Airbnb deal, book a free funding review. It's a soft pull only, 2 minutes, quick application, real numbers with a real game plan. No commitment, no cost, no obligation. Worst case, you walk away with a bit more of an understanding of how to get into your next deal and scale faster. So book a free call. The link's in the description below. I'm Mick Wadley. Let's go and close a deal.